Welcome to this lesson. In this lesson, we talk about the right mindset about the right expectations of trading. So why do we do that? Because in trading, a lot is about emotions. So you have to have your emotions under control and you have to have the right mindset. Otherwise, you will probably lose money. And first of all, let's start by looking at some interesting statistics of trading, which are just objective. It's not like my ideas, my statistics. So just some objective statistics over here. So for example, over 75% of all stock markets are executed, or all trades are executed by algorithms. So actually most of the trades that are made are executed by bots and algorithms instead of traders, retail traders. And the next one is even more important. Retail traders only account 5% to 10% of total trading volume, which is not much. So retail traders, you and I, don't really move the market. The market is moved by big players, not by us. The average stock market return over the last 100 years is around 10% annually. So 10% annually is like the standard, okay? This is already pretty good. Most hedge funds, by the way, are not doing 10% a year. They try, but they don't succeed. Usually they are lower than that. And you have to pay more for hedge funds instead of just investing in like the S&P 500 or MSCI World. 90% of traders lose money in the long run. Also very important and interesting. Only 1% of traders consistently make significant profits. Wow, only 1%. So 99% of traders lose money long term. Warren Buffett, one of the best traders in the world, his average annual return is around 20%. So double of the S&P 500, but still 20% of one of the best investors in the world. So next time when you think you can easily make 20% a year, you should think about it. Over 80% of day traders quit within 2 years. Wow. So you don't want to be one of them and you don't want to lose money in these 2 years. You don't want to quit and you don't want to lose money, of course. The average retail Forex trader lasts only 6 months before blowing their account. You don't want to blow your account. Less than 5% of traders make full-time living from trading. Psychology accounts for 80% of a trader's success. This is why we talk about it today, right? 70 to 80% of retail traders lose money in their first year. Most professional traders aim for a win rate of 40 to 60%, with risk management being the key factor. So this is also what we're going to talk about today. The win rate isn't important. It's about the right risk management. It's about the right strategy, having a consistent strategy instead of having a high win rate short term. Again, 90% of Forex traders lose money and quit trading within a year. Over 90% of crypto traders lose money due to volatility and leverage. Hedge funds using algorithms consistently outperform discretionary traders. 80% of institutional traders use some form of algorithmic trading. So I think you get my point here. So first of all, this is very interesting, but it also shows us that we have to have a specific mindset and understanding of how trading actually works. So most traders think they can just beat the market by drawing some lines on the chart, which is not really true. These are just basic ideas which won't work consistently. So it's very important to have your emotions out of trading. If you have too much emotions in trading, you will lose money, because there's a psychological thing in our brain that tells us if we have a profit, we close it too early and don't let it run. And if we have a loss, we think it will go back into profit and we don't close it early enough. So long term, we are losing money. Especially, you also have too high leverage. If you use too high leverage, you can blow your account. You have the spreads and the commissions. So the bank, or in other terms, the broker and market maker will make the money and not you. Another problem is that a lot of YouTubers and influencers are giving you the wrong ideas and wrong mindset. They are telling like, yeah, you can make $1,000 a day with just 1 hour of trading. You can make 100%. You can even make 1000% in a few days. These are all ideas that are not realistic. Of course, it is theoretically possible, but it's not realistic. We don't want to gain for a lucky shot, but we want to have a real edge in the market that is consistently and giving us results long term. So this is what we want to see. We want to see a steady growth of our strategy, not just making like 10x our capital and then lose all. It doesn't bring us anything, right? It's not real to have a win rate of 90% with a high profit factor and winning every trade. This is not realistic trading. Trading means to have a competitive edge in the market, to find alpha that is consistently and that is real. So we will see the same growth of our account in the future. So again, what is the standard? The standard is making 10% each year annually is already pretty good, right? This is already like if you invest and make 10% a year, you are a pretty good investor. If you make double of it, like 20% a year on average, you are like Warren Buffett, one of the best in the world. So you should understand that making like 50% a year is not just good. This is outstandingly good. This is world class good, right? And our strategies are exactly that. They are very, very good, and you can outperform the market by far, but you have to use it properly, and you have to understand that you should not risk too much, that you shouldn't leverage too much, and that you need the right understanding, the right mindset and expectation of the market. It's okay to have losing trades. It's okay to have drawdowns. This is totally normal in trading. You have to risk in order to win, and you have to use the right risk management. Basic ideas like drawing lines on the chart, like ICT, SMT, all of these concepts could work. They can work. There are some manual traders that are profitable, but as you have seen in the statistics, algorithms are basically beating and ruling the market. So we have to think like an institutional investor, like big investors, like the big players, in order to gain gains and profits long term, right? Understand that drawdowns are normal, losing trades are normal. Usually it's not a good trading strategy is not that it always buys low, sells high, the win rate is extremely high, the profit factor is extremely high. Theoretically, I could create a strategy that has all of this in there, a high win rate, a high profit factor, winning 90% of the trades. But this strategy won't bring you as much money and returns as a strategy that has low win rates, that is really optimized and working great. So this is a big mistake a lot of traders make. It's not about win rate, it's not about profit factor. You have to compare the and I will talk about that later in another lesson where we talk about backtesting. You have to compare the ratio between the maximum drawdown of a given time and the return in that time. Okay, so you understand what was my risk and what have I got out of my risk. So I risk X, and for that I got X or Y. Okay. And this is how you have to think about it. And then we'll more deeply explain it in the backtesting video. But this is what it is all about in the end. It's not about having a great looking strategy with a high win rate, a high profit factor, but we want to have money. We want to earn money, right? We want to get money out of the market. And for that, we have to have a correct strategy, a great strategy. We shouldn't also be like a lot of traders want to, like 90% of the traders want to scalp. They want to trade in a 1 minute time frame, 2, 3 minute, 5 minute time frame, because you want to see fast results. But that's actually like a gambling approach. You shouldn't gamble, because scalping, etc., is very volatile. You have the higher the time frame is, like not 1 minute but 1 hour, one day time frame, for example, the higher it is, the easier it is to foresee the market, to understand if the market is going in this direction or that direction. Because the lower the time frame is, the more leverage you have to use because you want to participate of small market movements. And the more risky it is, the more noise you have in it, and then you have a way higher risk and you will lose money more probably. Another thing is the commission, the fees are way higher when you use lower time frames. Not because you are using lower time frames, but you are opening and closing positions faster and with less movement, with less difference between the entry and the exit. So the commission is way higher in comparison to the returns. And if you don't have an extremely good market edge in your strategy, you probably will lose money. So it always makes sense. And I have tested hundreds, I think it was over 1,000 strategies. And there was no strategy that worked in a 1 hour time frame consistently reliable. The higher you go with the time frame, the better it is. This is why, for example, we have a lot of strategies in the 1 hour time frame, 2 hour time frame, 30-minute time frame, maybe 15-minute time frame, but not really low. Okay. In the end, scalping is a great idea. It's great to sell to you. Okay. Also, these influencers, these YouTubers, it's a great idea. In the end, the idea of scalping is just so you think you can gain very quick results. Like you can grow your account in 1 day to 10x or something. Yeah, okay, you know what I mean. This is a bit extreme what I say, but you get the idea. They just want you to believe in this idea, so you are taking a lot of trades, and in the end, you're making a lot of volume, and the broker is gaining money off you. If you are in a signal group, they're gaining money off you because you are placing your money to open trades, many trades a day, and in the end, you will lose your money because it's just too volatile. It doesn't work long term. You are just over leveraging, over trading, and they making money because, yeah, you just basically gave them your money. Not that easy, but basically like this. Because a broker is living from opening and closing trades. So you are making volume. You are trading. But that's not good for you. If you really want to make money from the market, you have to understand that this is not a good idea. This is just, it's like gambling in a casino, yeah, long term. Maybe you will find a market edge that works for 10 trades and then you made like 100% and then you lose everything. It doesn't make any sense. So I hope you understand the idea behind it. If you really want to make money, don't scalp too much. I don't want to bash scalping, okay? It can work for some, but it is extremely hard. Why not staying on the safe side and then just maybe move over time? If you are more advanced and you are already profitable, you can try to go more into the scalping direction. But the most profitable traders are consistently, they are not emotional. They use a strategy that is back-tested, or even several strategies that are back-tested, that are provenly working, and they are patient and thinking long-term with the right risk management, etc. And if you do this yourself, you can become one of the top 10, top 1% of traders. With our strategies, even, I would say, 0.1% of traders. But you have to follow the rules. And if you develop the right mindset and the right expectations about trading and the markets, you can become a very successful trader. But you have to do that. It's a lot of work. You have to understand that. You have to learn all of this, the right mindset, the right expectation, and then I think you are good to go. Oh, and one more thing. If you are following these YouTubers and influencers, I don't want to talk bad about anyone here, but usually 99.9% of them are just faking their results and telling you some stories that are just not true. If you search for like expose XY, any YouTuber, any financial influencer or trading influencer, you will find some proof that they are faking. I don't say anyone, but most of them, because most beginner traders fall for it and think it's real. It's not real. Okay, they are usually faking So you believe in it and you buy their course. They always have to sell you anything. It could be a course, it could be some signal group, anything like that. They are not making money from trading. They are making money by selling their products to you, or having you in their signal group, so they get a commission by the broker or anything like that. Okay, so they are affiliated with some providers like brokers, whatever. Okay, so this is how the business works. Why should a professional trader that is making millions from trading share their strategies, share their ideas, and have to sell anything? That doesn't make any sense. What they always say is, I want to help people. Really? Like, really? Does he really? No, everyone wants to make money. Everyone thinks about themselves in the first place. So yeah, this is why we are different. For example, we are also selling our strategies, but the difference is that we use them ourselves. At least me, I'm using our own strategies. Realistic strategies are not that you make 10x in a month. It's like doubling your account in a year, like 50%, 100% in a year. This is what you usually see. So you don't get rich from it quick. This is also something people don't want to understand. Trading doesn't make you rich within a month and within a year. You have to consistently grow your account, or get better and better at trading and use great strategies. And then over years, you will become rich. This is how it works. Okay. So, it's again a wrong understanding of trading, and most people don't want to hear that, right? So it's good that you are here, that you understand it, and that you are on the way to become a real professional trader. If you just follow these YouTubers, influencers, you will you will be poor. Yeah, you will lose your money over a long term, especially long term. Okay, because you are following the wrong ideas. Thank you for listening, and yeah, I hope this was helpful. Again, you can always reach out to us if you have any questions. Otherwise, see you in the next lesson.